Hi there, Serial Trader here. Let's check in with the major US indices. And we'll start off with SPX. So I just wanted to start with this chart just to show you the volume. So today, the volume was roughly half of what it would normally be, okay? And that was due to the early closure and just overall lack of participation due to the holiday tomorrow. So these markets won't be open again until Thursday. So this is just the daily chart and just overall what I'm still looking for here. Still looking for a bullish resolution. Let's go with the hourly chart for a little more detail. Let's get rid of that volume indicator there. Okay, so if you look here, I was liking this 1-2 and then a 1-2 of smaller degree, possibly setting up for a strong extended third wave. But now, okay, so this technically we've still held the lows of I believe this was Friday of last week at 26.91.99. So that is low to hold at this point. But now I've kind of noticed something. So even though this looks extremely choppy, overlapping, and corrective, and we're still above this swing low over here, so this can certainly be a 1-2 as long as that stays the case. It really looks to me, just at a glance here, it really caught my eye, that we have something like this, that we have a ABCDE possibly, a triangle, and that, you know, if that's true, and we break out of the triangle bearish, that means we're coming down in, you know, another leg down and likely taking out that low. Certainly taking out that low. I'm kind of wondering, well, how does this triangle fit into this overall count? Is this somehow a 1, 2, 3, 4, 5? Is that possible here? It's possible. I don't like it, but I certainly can't ignore the potential that a triangle is forming here. Now, of course, if we just, you know, have what I think originally was happening, a 1-2, and then a 1-2, and then we have this third wave breakout of a larger third starting, then this triangle will be, you know, negated. It won't have actually come to fruition. But if not, I was thinking maybe we had, you know, something like this. It's possible we have a expanding leading diagonal wave 1, okay, pretty rare, but it does exist, and then a 2 up, 3 down, and then we've got our A, B, C, D, E, and if the fourth ends there, now remember that wave 4 cannot end in the price territory of wave 1, so in this case, even though the triangle would have overlapped here, I think it would have overlapped, let me just check here, yeah, it would have. That's still acceptable because if it ended here on the E wave, it didn't overlap at this point where it ended. So that's a little nuance there. So that could still be an acceptable impulse wave down. So this is possible, but I'm still not convinced just yet. It simply has to break down and take out this low for me to embrace that. But, you know, just visually, can't deny that there's a triangular formation taking place there. It has to really prove itself and get out to the upside to negate that. But I'll leave these labels in place for now. Okay, and also before I go to the candlestick chart, I just wanted to show the NASDAQ. So I mentioned before that the NASDAQ looked very mature out of its own triangle. And you could count 5 waves up and, you know, possibly had a significant top approaching. And then we had our bearish engulfing. We'll get to the candlestick chart to look at that. And then really on this 1 hour chart, just short-term waves here, you can easily get a 1, 2, 3, 4, 5 down for the NASDAQ. And so far, ABC up, contained within this channel. And right here is the equality relationship between A and C, just almost perfect there. So that's kind of implying further downside here in the NASDAQ. Now, whether it's a 1 down, 2 up, and then we're coming down in 3, that's definitely a more bearish scenario. Or if I just put that to the side, because we don't know that yet. Or whether we've come down just in a, you know, corrective wave, or what will be a larger corrective wave, an A down, B up, and then a C down, and then, you know, resume the uptrend. That remains to be seen. But right now, this, you know, the structure is heavily favoring that we're going to have another leg down on the NASDAQ, which, you know, it complicates things on the S&P that I was looking at there. Because here I'm, you know, favoring a bullish outcome, although definitely aware of this triangle and how that might change things. So at an interesting point here in the markets, there's some conflict. It's not obvious what's going to happen from an analytical perspective at this point. So of course, no significant positions should be taken until things clear up. And again, I just continue to be doing intraday trading, real quick, almost scalping style trades, and that's working just fine. But let's go to the candlestick chart. So for SPX, open higher today, but then close lower. But not an actual candlestick signal. It's not an engulfing signal or anything like that. But we did close below the T line and the 3T line. But again, how much weight do I put into this on such a low volume shortened day? That's another complicating factor. Okay, so SPX, very unclear here still. We'll go to the Dow Jones Industrial Average.
Trading connection lost.
Okay, and then Dow Jones Industrial Average, we didn't actually put in a sell signal, but definitely still a negative day. Closed below the 3T line and the T line. So the Dow looking similar candlestick wise to the S&P. And just visually, I'm noticing these tall upper shadows, long upper shadows. So a lot of rejection of these higher prices, and certainly rejection of the T line still. So the Dow has failed to break out of its oversold condition just yet. Now the NASDAQ, this is where things kind of interesting. So as I was showing you on the wave chart, it looks like we have a 5 down and 3 up when you zoom in on that hourly NASDAQ chart. And from the top, we had this bearish engulfing candlestick, and then that was confirmed by negative trading, and then actually a gap down. And then we had a doji here, another bearish engulfing, but that didn't produce anything. And then we had this off the 50-day moving average, rejection off the T line, and then a bullish engulfing off the 50-day moving average. That was yesterday, and then today, open higher and then close lower below the T line and 3T line. So we haven't actually negated this bullish engulfing pattern. That would involve taking out the low of the candle, which would be 74.43.1 on the NASDAQ here. So really some mixed signals here. Not overly clear from the candlesticks at the current moment, other than the fact that we're still below the T line on all the indices. And then we have that negative wave pattern on the NASDAQ that I showed. And then we have the potentially bullish wave scenario on the S&P. But we also have that triangle possibility, which would be more bearish, at least short term. So very, very unclear. And, okay, if we look at VIX here to see if we can get any clues. No, VIX is still just in a fairly narrow trading range. Certainly not breaking out as it would if we were really falling apart in the market there. So no early clues from VIX there as of right now. So it's very, very difficult to get a good read on this, okay? And I really wouldn't recommend taking any big swing positions until this clears up. I'm certainly not going to. But just for day trading, really short-term stuff, that's all I'd recommend doing right now as it is. And that's certainly all I have been doing with the indices. All right, well, hopefully that was a good update. Hopefully not too confusing. Right now, there's just so many mixed messages from the market that it is confusing, and because of that, it's there's really no good big trade to be had at the moment, in my opinion. All right, market's closed tomorrow, so maybe we'll check back in after Thursday's price action. Serial trader signing off.